So is Europe the catch-up trade to the States, or is Europe the reaction trade to China?
Well, that's a good question. I would say it could be the catch-up trade to the States if you think the cycle continues. If you think you can hike the Fed fund rate by more than 500 basis points and the cycle never stops. If so, then Europe could benefit, because if the cycle continues, US growth will not accelerate. European growth has scope to accelerate. It's in slightly negative territory. So the question really is, will the cycle continue? Are we at the very end of the cycle? I think it's the latter. And then, of course, you don't want to be long European equities.
So more of a US catch-up trade then over than China?
Well, it depends. I think all your questions are aimed at the upside. So if you think basically, is there going to be upside? I'm saying it's very likely within 3 to 6 months we're going to see unemployment rise in the US, as it always does at this point in the hiking cycle. And then, of course, you're not catching up anything. You're catching down. And then you're asking very different questions.
How close are we to the highs being in for European equities?
I think you asked me earlier, and I think we might have seen the high. It really depends now how quickly are we seeing the pain in the labour market, the cracks in the labour market. I would not be surprised if we see them within the next 3 months. And then you could have a very complicated pathway where in the near term you got these inflation jitters in the US. Yep. And by the time they are ironed out, you're basically looking at labour market pain. And in that case, you could have seen the high already.
Your view on Europe, though, the pushback would be we're going to get an ECB cut, the growth picture is improving, and the earnings story suggests that resilience is there. That's the pushback, the view, the constructive view on European stocks.
Yeah, I don't think so much as an earnings story. So European 12-month forward earnings, they peaked in October. They're down around 2%. They really haven't done anything. But I completely agree with you. There's a really interesting battle of narratives between domestic growth momentum in Europe improving, credit conditions are easing, the credit impulse is positive, PMIs have started to come up. But then you see these ominous signs about the US labour market. And then every investor has to ask themselves, if these two giants go up against one another, who's going to be more powerful in terms of their market impact? And I think there's no question. The moment the labour market rolls over, it's always the dominant force.